How AI is completely reshaping finance in 2026. The hack. Finance is entering one of the biggest technological shifts in modern history. Artificial intelligence is no longer just assisting banks and financial institutions. It's increasingly becoming the operating system behind global finance itself. From autonomous AI agents executing financial workflows, to fraud systems detecting threats in milliseconds, to personalized investing powered entirely by algorithms. 2026 is becoming the year finance truly enters the Agentic AI era. And the speed of change is catching many people off guard. Because this isn't just about automation anymore. AI systems are now beginning to reason, plan, monitor, optimize, and act with minimal human intervention across massive financial ecosystems. So in the next 10 minutes, we're breaking down exactly how AI is transforming finance in 2026, the biggest breakthroughs happening right now, and what this means for banks, businesses, investors, and everyday people moving forward. Let's dive in. The rise of Agentic AI in finance. The biggest financial AI story of 2026 is something called Agentic AI. For years, financial AI systems mainly analyzed data and generated predictions. But now, systems are evolving beyond passive analysis into active execution. Modern AI agents can process documents, evaluate financial conditions, monitor risk, communicate with systems, trigger workflows, and complete multi-step operational tasks automatically. This is fundamentally changing how financial organizations operate. Instead of employees manually handling repetitive workflows, AI systems are increasingly coordinating entire processes from start to finish. In many organizations, AI agents are already assisting with invoice processing, reconciliation, customer onboarding, compliance reviews, collections outreach, expense analysis, and financial planning operations. And the scale of adoption is accelerating rapidly. Private equity firms, fintech startups, insurance providers, and major banks are investing heavily in agentic systems because they reduce operational friction dramatically. One of the biggest shifts happening right now is the transition from reactive finance to proactive finance. Traditional systems waited for humans to request analysis. Agentic systems continuously monitor environments in real time, identify anomalies, recommend actions, and increasingly execute tasks automatically. For example, an AI system may detect suspicious spending behavior, freeze a transaction, notify compliance teams, generate a fraud report, and initiate customer communication within seconds. That level of operational speed simply wasn't possible at scale before modern AI systems. Fraud detection, risk, and compliance. One of the areas seeing the fastest transformation is fraud detection and financial security. Financial fraud is becoming more sophisticated every year. But AI systems are becoming dramatically better at identifying unusual behavior patterns in real time. Modern fraud detection systems can analyze transaction timing, geographic behavior, purchase patterns, device fingerprints, account activity, and behavioral anomalies simultaneously. And unlike traditional rule-based systems, AI models continuously learn and adapt. This allows financial institutions to detect threats much faster while reducing false positives. That matters enormously, because false fraud alerts frustrate customers, while missed threats cost companies billions of dollars globally every year. AI is also reshaping compliance. Traditionally, compliance departments relied heavily on manual auditing and periodic reviews. Now AI systems can continuously monitor transactions and operational activity around the clock. Some institutions describe these systems as always-on compliance analysts. And in highly regulated industries like banking, insurance, and trading, this creates massive efficiency improvements. Meanwhile, investment banking and trading are also evolving quickly. AI systems are helping firms optimize trade execution, analyze liquidity, monitor market volatility, improve portfolio balancing, and support risk management decisions in real time. Importantly, though, most large institutions still keep humans firmly involved in high-level oversight. Because while AI is becoming incredibly powerful, finance remains an industry where trust, accountability, regulation, and judgment still matter deeply. Personalized banking, investing, and credit, customer-facing finance is also changing dramatically. For decades, personalized financial advice was mostly reserved for wealthy individuals with access to private advisors. AI is changing that. Modern AI-powered systems can now deliver highly personalized recommendations at massive scale. Banking apps increasingly analyze spending behavior, savings patterns, investment preferences, debt exposure, and long-term financial goals. This allows AI systems to generate customized financial guidance almost instantly. We're also seeing major growth in Robo-Advisors and AI-assisted investing platforms. These systems automatically rebalance portfolios, optimize allocations, monitor market conditions, and even assist with tax optimization strategies. For many younger investors especially, AI-first financial platforms are becoming the default experience. Credit and lending are evolving too. AI underwriting systems can process enormous amounts of financial and behavioral data far faster than traditional methods. Supporters argue this can improve efficiency and potentially expand financial access. However, critics continue raising concerns around fairness, transparency, and algorithmic bias. And that's becoming one of the biggest debates in AI finance today. How do we balance speed and automation with accountability and fairness? Because when AI systems influence lending decisions, investments, or fraud investigations, the stakes become extremely high. The bigger economic impact financial institutions worldwide are investing billions into AI infrastructure, cloud computing, cybersecurity, and automation systems. Why? Because AI is improving both efficiency and profitability. Many firms report that AI is reducing operational costs, accelerating workflows, improving fraud prevention, increasing customer engagement, and helping employees work faster. But this transformation also affects jobs. Routine operational work in finance is increasingly automated. That includes repetitive analysis, documentation, administrative processing, and some compliance functions. At the same time, demand is growing for entirely new skills. Financial institutions increasingly need AI governance specialists, cybersecurity experts, automation strategists, AI operations managers, and professionals capable of supervising advanced AI systems responsibly. The future financial workforce will likely look very different from the past. Human expertise won't disappear, but human roles are shifting toward oversight, strategic thinking, relationship management, and high-level decision-making. The future of AI finance. After decades watching technology reshape industries, one thing feels increasingly clear. 2026 is becoming a turning point for financial AI. We are moving beyond isolated AI experiments and into a world where intelligent systems actively help operate large parts of the global financial ecosystem. The institutions that succeed will not simply be the ones using the most AI. They'll be the ones combining powerful AI systems with strong human judgment, ethics, governance, and trust. And for individuals, the message is equally important. Understanding AI is no longer optional in finance. It's becoming essential. If you enjoyed this breakdown, subscribe for more future tech and AI updates every week. And let me know in the comments, what development in AI finance surprised you the most this year? Thanks for watching, and I'll see you in the next one.